Hi, and welcome to our uranium market update. The move toward nuclear energy continues to build throughout the world, and according to the World Nuclear Association, 440 reactors are currently operating around the world, and another 69 are under construction. China has committed to building 150 new reactors by 2035. France plans to construct and operate 14 new reactors before 2050. The US government is targeting a four-fold increase in nuclear capacity from 100 gigawatts to 400 gigawatts by 2050. The state of New York recently announced its intention to develop and construct at least one new nuclear reactor. All of these initiatives require much more uranium, and according to the WNA, uranium demand will grow from 170 million pounds annually to 300 million pounds by 2040. So what does all of this mean for the uranium price? We will discuss this and more with our guests, beginning with Brian McLaughlin of Canaccord Genuity, followed by Scott Melbye of Uranium Royalty, Guy Keller of Tribeca Investment Partners, and we conclude with Per Jander of WMC. Please remember, we're always looking for new ideas and new guests to interview, so please leave your comments, leave your suggestions below in the comments section. I want to thank our corporate sponsor, Small Cap Navigator, a division of Canaccord Genuity. I hope you enjoy these discussions. Brian, thank you very much for joining us today. You are the head of a new division within Canaccord Genuity, and it's called Small Cap Navigator. And before we talk about this new division, why don't we first talk about Canaccord Genuity for those who might not be familiar with this firm? Where is it based and what services does it offer?
Sure. Hi, Jimmy. It's great to see you again. I'd love to. Canaccord Genuity is a leading independent financial service firm based here in Toronto. It is, however, a global firm with capital markets operations in North America, the UK, Europe, Australia, and Asia. We also have a very strong and growing wealth management business, which manages over $120 billion across Canada, Australia, and the UK.
And that's a great overview of Canaccord. Now tell us about this new division, Small Cap Navigator. Why was it formed? What is its purpose?
Yeah, I would love to. Small Cap Navigator was really born out of the belief that high quality, earlier stage Canadian growth companies did not have all the resources available to them to properly execute their business plan. We pride ourselves in supporting earlier stage entrepreneurs and helping them navigate the capital markets. We seek to help companies be successful through prudent advice, expanding awareness of their companies, increasing their access to capital. We can also provide market making services to help your company's trading profile if that's something that's needed. For investors, we're really looking to showcase the best earlier stage growth companies. At Canaccord Genuity, we are successful when our clients are successful.
And Brian, will you focus on one specific sector or will you focus on many different sectors?
No, Jimmy, we're really open to any sector, are more focused on high quality companies. However, here at Canaccord Genuity, we have over 100 research professionals covering over 900 companies. We have over 275 investment bankers that cover many different sectors. So we have a lot of industry knowledge, which we can and will use in assisting any of these companies.
And as you mentioned, Canaccord is located in many jurisdictions around the globe. Are you going to focus on all of these jurisdictions?
No, Jimmy, for right now, we're focused on the Canadian early stage companies.
Well, Brian, that was a great overview, and I want to thank you for spending time with us today. If someone would like to learn more about this new division, Small Cap Navigator, where can they go or who should they speak with?
Absolutely. The easiest place is go to the website, canaccordgenuity.com or cgf.com. Or if you want to contact me directly, it's bmclaughlin@cgf.com.
Brian, once again, thank you.
Thanks a lot, Jimmy. Have a great day, and I look forward to the uranium strategy session.
Guy, thank you very much for joining us today. How are things in Sydney?
Thanks, Jimmy. Thanks for having me. Yeah, a little bit cold and wet today, but it's a great city down here.
I have yet to have the pleasure of visiting Australia, but what do you enjoy most about Sydney?
Well, I mean, we're in the beginning of winter, and last weekend I was about an hour north of Sydney surfing with, well, my son was surfing. I was pretending to look like a surfer. And we're in school holidays here. So next week we go about 6 hours south and go skiing. So it's as I said, it's a great city. It's a wonderful climate. It's just a shame about the time zone.
See, and forgive my ignorance, I did not realize they had skiing in Australia. What would be the elevation of those hills or mountains?
Yeah, they're not certainly not the terrain of northern hemisphere or North American ski fields, which are skied a few, and we don't get the snowfall. But I think the highest point's about 2,000 meters, so it's kind of semi-respectable.
Yeah, that's not too bad at all. Okay,
Yeah.
so let's get into it. Let's talk about nuclear energy and also uranium. And when I speak to managers from around the world, I'm always curious to hear what trends they're seeing in their part of the world, especially when it comes to nuclear energy. And Australia is very unique because it doesn't allow nuclear energy, and even mining is only limited to one or two states. But how would you define the interest from investors, both retail and institutional, for investing in nuclear energy and or the uranium sector?
Yeah, it's a very so I speak to sort of investors and peers all over the globe on this trade on uranium and nuclear, and Australia is a different approach to what I find in North America. North Americans and I mean even in Europe and Asia, they're very well versed on nuclear being the driver for the uranium thesis. Whereas I find Australia tends to focus a little bit more on the uranium commodity itself. So, just like gold or lithium or rare earths or copper or whatever, it's what's the commodity doing and so what then junior mining stocks can I trade to move that. So when unfortunately, there's a bit of a fascination with the spot price, although I think that's probably a disease that a lot of investors have, for lack of any other transparency. But they tend to focus a little bit more on that. So if the spot price is depressed, they say, well, there's no real point to own them. But if it's hot, then they'll chase. So it's kind of different. That not saying that there's still an understanding of the nuclear thesis, although, as I said, there's just only one or two layers of the onion peeled back, whereas North Americans I tend to find peel back a little bit more because they've got nuclear in their back gardens.
Interesting. And one thing I hear from many corporates that are based in Canada is that Australian investors are much more sophisticated when it comes to resources, and they can be rather aggressive too when it comes to buying into a particular sector. Would you agree with that statement?
Yeah, I mean, there tends to be periods when the ASX uranium stocks run much hotter on valuation perspective, and that can be a little bit deceiving because the reality is down here there's Um, seven uranium stocks sit in the small ordinaries, which is basically the realm of small cap managers here in Australia, which is 200 stocks from about 101 to 300 in the ASX. That's the biggest pool of discretionary capital in Australia because ASX 100 tends to be very passive index focused. ASX 200 is also very index focused, low fee sort of structures that the super funds love. So the small cap funds are, as I said, the last bastion of discretionary. So it wasn't that long ago that uranium didn't even exist in their index, in their universe. And then suddenly we had Boss and Paladin rip roaring and dragging a few others along. And at one point, that was about a 4% weight. So 200 stocks, seven in their universe, and about a 4% weight. It's kind of hard for them to ignore that. So what we saw was a lot of those small cap funds literally buying ASX uranium stocks to bring themselves to index weight, so they weren't going to get punished. They weren't going to be, a synthetic short to their index, if you like. Paladin came out of that index because it promoted up to the ASX 100. It went to the big boys, and has since joined the small lords again. So it's come back down. So we've had the end of the financial year here in Australia, June 30. So a lot of discretionary managers have been sitting on their hands, just trying to close their books. And since then, as I said, Paladin's come back into their universe. So I actually expect July you'll probably see that repeat itself again, where the Aussie stocks sort of look look more expensive on valuation because some of these small cap funds will be trying to adjust for that extra 1% uranium weight.
The World Nuclear Fuel Market held its annual conference last month in Sydney, and I'm curious, how was it received? How was the attendance? And I know this isn't a conference for retail investors, it's more for fuel buyers, but maybe you can give me some color.
Yeah, I mean, look, I was applaud the organisers for moving the 51st conference down to Sydney. Unfortunately, we couldn't give them a nuclear country because of the federal election that we was held here in May. However, it didn't stop them coming, and I think there was only of a handful less than the record attendance they had at their 50th meeting last year, which was in the United States. So, I mean, obviously, I think a lot of the ASX uranium players padded out some of those numbers, but even if you take that into account, there was fuel buyers from all over the world, from United States, a handful from Europe. There was fuel cycle people. There were traders. Asia had an enormous presence from Korea, China, and Japan, um, and some Middle East attendants as well. So it was a really good conference. We were able to showcase our beautiful city here, and I mean, they all complained about the jet lag, but it was, and as you said, it was an industry conference. So there was really only one or two stockbrokers and one or two other institutional fund managers that came, and the rest were all uranium or fuel cycle people.
Now, that's a long way to go for somebody from the US. How many US utilities were there?
Yeah, I mean it was a pretty good attendance. There was over half a dozen US utilities, and it was great to spend some time with them. Previous contact for me, as I hadn't been to any of their major conferences in the US, was emails or telephone calls. So yeah, it was great to see them down there and actively eyeballing some of these Australian wannabes that wouldn't necessarily turn up to these conferences. And so yeah, I actually had some good conversations, which was worth attending.
So why don't you give us a little more color? You spoke with a lot of these fuel buyers, but I'm curious, when you talk to a utility from the US versus a European versus someone from China or Japan, what's the difference in terms of how they negotiate and what they want?
Yeah, I mean it was interesting, and one of the points I was trying to make to the US utilities was, there seems to be when you look at the fuel cycle conversion and enrichment, for example, there seems to be a consensus, a universal consensus that capacity needs to be invested in expansion for conversion and enrichment, and you're seeing a little bit of it. Um, but then everybody's kind of pointing to everybody else to say, well, it's your responsibility to sort this out. And then the utilities kind of just think that when they need it, it's going to turn up. And it's the same with uranium. And, when I was having a few conversations just more generally, without being too specific, you know, when I say, $80 term price is not cutting it, guys. Like, you're not seeing final investment decisions being made by any greenfields here. And the handful of brownfields care and maintenance that have all turned up, almost all of them have had issues. They've been slow to ramp up, and they're nowhere near the pounds that you're going to need. And you kind of have to act now. And I could see their problem. And part of their problem is they privately are aware that $80 is not the right price, but they can't go back to their boards and CEOs and say, we've just been down to Australia and inked a $90 or $95 term price, but don't worry about it because it's given us supply out to 2035. And so we're fine on the uranium front because those boards and CEOs also get UX and trade tech and say, but hang on, the price is $80. And so they're kind of sitting there saying, if the price moved and we could see a legitimate path to some greenfield supply, then absolutely we would sign at that new price. But we can't until it moves. Flip that on its head to our Chinese friends who are basically saying, what price do you need? We just want the offtake. We missed a trick at $40 and $50 where we weren't aggressive enough because our management and board was saying, if the term price is $40, why would you sign something at 50? And now the term price is 80, and they're saying, why didn't you sign something at 50? So they're on the opposite side where, they would, and I think one of them went up to the next gen boys at one of their socialist events and said, we'll take all of your pounds, sign on the line. But quite understandably, some of these Western developers are a little bit, or they are hesitant to sign or they're off to the Chinese because they're worried about the geopolitical aspects of it. So, that was, and then of course you had half a dozen Japanese trade houses, and we heard that they turned up for the first time to WNA last year, for the first time in a decade, and we host a uranium conference down here in Adelaide. They were down, one or two of them turned up last October, but half a dozen of them were down here, and they were all looking for the same thing: near-term pounds, strategic stake in the project, offtake on that project stake with an option to increase. And you're kind of sitting there shrugging your shoulder. And I know a lot of them from the Japanese trade houses because I used to trade gold with them more than a decade ago or 2 decades ago. Um, I'm saying, guys, like that's the unicorn. Everyone wants that. Um, you know, it's not here right now.
Do you think a lot of these utilities, especially in the US, they're just relying on hope, or maybe they have this false sense of security? They can go into the spot market and pick up £1 million or maybe £2 million, or maybe they can enter into a carry trade, and so they think there's going to be ample supply out there, but they're not looking out 5 or 10 years like the Chinese are.
Yeah, I mean, I kind of feel for them in a way because they turn up to the same conferences, and there's a conference circuit for the fuel cycle, and those are the conferences they go to, and at those conferences they've got uranium and fuel cycle traders and brokers who get paid to trade spot or mid-term material and do carry trades. Those traders don't get paid if Constellation signs a long-term contract with a Boss Energy. Um, you know, like they're not making a commission on that. So what's their motivation? They're at these conferences saying to the utilities, "Hey, it's fine. When you need it, give me a call, and like last time, we'll do you a carry trade for a few years." And we've got through the better part of a decade doing that, and so there's these greenfield guys where we've got them on our books as well. So they're telling these utilities that, and then anywhere in the world these utilities are going, you're getting the local uranium market turning up as we did WNFM with the Australians, all saying, "Hey, I got a great project. It only needs three times my market cap to build it, but I'm going to be there for you when you want me." And so, I kind of feel for these utilities because there's obviously some that are much more switched on in the market than others, and they are not to be fooled, and in fact they're actually quite clever in how they're doing some deals at the moment. But there's others where they're sitting in the engineering department, or they're sitting in a room full of scientists, and when their board says go and find fuel, they go and find fuel. So they're kind of saying, listen, sure, $65, in benefit of hindsight, would have been a good price, but I wasn't told to go and find fuel then. So I say, well, what if it's 110? They go, well, then it's 110. That's just when I get told, so that's when I'll do it. And I don't get paid, or especially in these regulated utilities, I don't get paid to take a risk. Um, but when I'm told to do it, I'll do it, and that's the price. And as long as I'm somewhere around the price that the board thinks, then great. So it's kind of a bit of an echo chamber for these guys in attending the same conferences.
So you made a very good point earlier about the Chinese and how aggressive they are, and they were very aggressive when it came to lithium a few years ago, and ran the price up significantly. And now, of course, it's down quite a bit. But do you see them doing the same sort of thing with spot uranium or with term uranium? Like if I'm
I think,
talking to you in a year or 2 years from now, do you envision where spot might be at 125 or 150?
yeah, look, I mean, I think so. The Chinese, especially, have been much more strategic this time with uranium and much more strategic than they've been in any other commodity. And I think the reason is they're very well aware of just the massive quantity that they're going to need. And people look at, oh, what are they building now? What's under construction? And oh, they've got all these planned and whatever. They've got this pipeline, but they're going to have thorium reactors. They're going to have this and that. They're probably, I think the Chinese are sitting there going, those planned and prospective are actually things that we need to like, they're actually going to happen. And I traded commodities for 25 years before stumbling into this uranium thesis. And the one thing that I always worked out was that when the Chinese said they were going to do something, perspective was basically going to happen. Whereas the West says perspective is never going to happen. So, and you've seen that with, they've got project level stakes in Namibia. They were very strategic buying Rossing, back in the day. It seems like forever ago now. They're wanting strategic stakes in just about every project around the world, and they've tied up a huge amount of Kazakh capacity or output, and doing deals and taking all those Russian joint ventures and what have you. So, but and then people say, well, they've got a lot of inventory. Sure, but they still need more. So I think the Chinese would love to try to continue to do this at a point where it doesn't impact price. At some point, though, we're going to get to that point where everyone else goes, wait, what? Where's that supply? Because the prices right now are not working, and the supply right now is nowhere near what we're going to need in China as well as the West.
Guy, there's been very few pounds contracted thus far year to date. I mean, we're already halfway through the year, but it's less than 30 million pounds. Do you think we're going to get a significant ramp up as we go into year end, maybe after the WNA?
I mean, seasonality would suggest that we do, that's generally when they're most active. I think that there's actually a lot of inquiry going on, but just not a lot of things being inked at the moment. And that's largely because those that are producing are under pressure from investors like myself and some of my peers not to give away the keys to the kingdom at these prices. And you hear that term layering in contracts. Those we had that drawdown period at $63 spot and not a lot of activity in the term. And I think the utilities were hoping that some of those brownfields would start, falling on their swords and writing contracts with at least lower floors. But most of them have held pretty strong, and I think the biggest reason for that is they weren't producing as much as they thought they were going to be producing in their ramp ups. So utilities are looking at a piece of paper where, a restart project A has said they're going to do this and saying, oh, wow, they're going to have to come and sell some of these pounds. But, these guys have all had problems. So in a way, their issues in ramping up has probably saved them from feeling like they needed to get into lower price contracts. So I think now what you're going to find is the ball's back in the seller's court again. Cameco are holding strong. There was talk at WNFM that if Cameco was to be inking a term contract at the levels that they were talking about, it wasn't going to be an $80 term price anymore. It was going to be somewhere well north of that, 85 plus. However, nothing's being signed, so it doesn't get reported. And anything that has been signed, those utilities have been really, really careful not to have a term price in that so that it doesn't move that. And that's something as well where, there's deals being done with 75, 130, 77, 135, floor and ceiling with an escalation starting at the first delivery. So either a hybrid of the term and spot price at the first delivery or the term price at the first delivery. Now, that's really clever from the utilities because there's no term element. So UX and TradeTech can't say, a future starting term price is unknown. So how do they put that number on? So, but there is activity happening. And yes, I suspect that you'll see some more come through, and hopefully we get to a point where either the price reporting has to acknowledge that things are higher than $80, or a seller forces a print higher than $80 to get this thing moving again.
So let's talk a little bit more about supply and demand, and especially you've already touched on this, but there's been a lot of issues with mines coming online. We know mining is very complicated. There's always issues with permitting or construction and cost overruns, metallurgy, so many things. But we've already seen numerous delays within the uranium sector. How do you think this is going to impact supply going forward? And maybe you can also speak to when's the next significant mine coming online.
Yeah, well, I mean, as you said, we've had a number of restart projects, in the last 12 months, and almost all of them have had delays, and almost all of them have had, cost increases and ramp up issues. Some are still going through that. The next project. Well, there's two more, obviously the restarts with Peninsula and Lotus, but you've got Boss and Paladin and Energy Fuels and a few of those others. But the grand scheme of things, um, most of those pounds that's not that many pounds. Um, your next big greenfield, I mean, it's not even that big, is maybe DASA or probably DASA in global and Niger, but you've got a big political risk on that at the moment. They're progressing, and the financing keeps getting kicked down the road. Then I mean your mega project is obviously next gen, and you've got potentially some Namibian stuff coming in between, or some other African stuff. But again, at these prices, no final investment decisions are being made. So they're sitting there saying, "Oh, we hit go today, and we'll be in production in 2027, 2028." What happens if you don't hit go today? Then you're actually closer to 2030. It's the same with next gen. It's like I've got 2030, and that's kind of middle of consensus, and that's no criticism of next gen management at all. If I believe that they will be able to deliver that project, but we've already seen permitting delays. Construction's just timelines will slip because they slip in mining, full stop. Doesn't matter whether it's uranium or not. And of course, the big massive bullish signal is if NextGen comes in play with a M&A, whether it's Cameco or Rana or BHP or some other non-uranium player comes in, there's no way they're a 2030 project then, because anybody that acquires a development of any commodity is not going to build to the mine plan of the previous custodians. They're going to go and review that. So, if you see that that play out, and at these prices, next gen's still phenomenal value. I mean, remember, it's probably the best ore body in the world of any commodity, or if not the best, one of the top five, in a friendly jurisdiction with the full support of the indigenous tribes. So, if that's to happen, that's massively bullish because that pushes that back into the 2030s just because they'll want to review that.
And let's just say best case scenario, it is up and running in 2030. How many pounds will it be producing annually?
Yeah, I mean, so I think the maximum they're going to be trying to do is about 30 million pounds. I think life of mine somewhere between 24 or 25 million pounds. There's the ability maybe to stretch out the mine life and produce less. However, the pounds are going to be needed. I mean, you think about what we've got going on at the moment on the demand side. We've had Western demand that was falling off gradually, is now increasing. We had it petering off, then it was flat, now it's up. Um, you've got capacity uprates, you've got refurbishments going on, you've got life extensions. None of that. You're getting 5 megawatts, 5 gigawatts of capacity uprates in the US alone. That's what 2.5 million pounds of uranium per year. I bet you none of that's bought. You've got 20-year life extensions on just about every reactor in the United States. Again, uranium's not accounted for there necessarily. And you've got restarts happening with Three Mile Island and now Palisades. Those pounds need to be bought. Um, and you've got 65 or 70 odd reactors. I mean, by 2030, those 70 odd reactors that will be largely connected to the grid. So, almost all of those 70 will be connected or connecting by 2030. That's 38 to 40 million pounds of additional demand every year from 2030. And in the meantime, like this year, China's what 10 to 12 reactors. So that's 5 to 6 million pounds. 2026, 2027, 2028, 2029, 2030, all the way out to 2035. You've got China adding another 5 to 6 million pounds of demand, which will be additional from 2031 onwards, because today's construction starts will be connecting probably 2031. They'll be finished by 2030, but then they'll go through obviously their commissioning and testing. I mean, it's a huge amount of demand turning up in a market that's already got a primary mine supply deficit of, call it 20 or 30 million pounds, maybe more, depending on how you want to do your calculations. So assuming NextGen's on time and ramps up to the way they want to do it, those 25 million pounds that they're likely to produce in 2030, 2031, they're gone already. Like they're sunk. There's still a deficit.
So bottom line is there's no meaningful pounds coming on until 2030 at the earliest. And then you also raised a very interesting point. If somebody were to take them out, Cameco, Orano, whoever, maybe you're waiting until 2035, maybe later
Potentially.
before those pounds come
Potentially.
into the market.
Yeah. Yeah. Absolutely. Absolutely.
So let's talk about equity performance now. It's the past year, I guess you could say it's been a frustrating one. At least it has been for me. And when I look at some of the names like Kazatomprom, the world's largest uranium producer, it's up 10% on the year, give or take. Cameco's up 30%. A lot of the Explorco's developers, they're flat on the year. And some of the bigger moves have come in some, what I would think, unexpected names. Constellation Energy is up 40% on the year. I think it's up 100% from the April lows. So just a massive move. Vistra's had a big move. And then when you look at some of these secondary names, I'm not even sure what you call them, infrastructure names, Oklo, NewScale, for example, they're up significantly. But maybe you can just tell us your thoughts on the equity valuations and where you see value.
Yeah. It's that's I mean, it's and apologies if you can hear something in the background. That's my dog snoring on the couch. Um, Lizzie, quiet. Um, it's been an interesting year, and obviously we just closed our financial year here, and I was looking back on that. If I had not had uranium explorers over the last year, I would have had a phenomenal year, because over half my fund is sitting in what I'm calling nuclear innovation. And so, I just closed this last quarter. I did a 45% quarter. And as you said, none of that was from uranium explorers and developers. Um, a little bit of it was from producers, and obviously Cameco has been a great place to sit. And a lot of our job is, I often people say I could, instead of investing in your fund, I could buy the ETF, and you say, yeah, sure, you could buy the ETF. It balances every 6 months on a market cap weighted metric. And I can give you three companies that have all merged just to have bigger market caps to have a bigger ETF weighting, and none of them are anything that I own. Um, so, but a lot of our job is timing moves and understanding where flows are, and that's been, I think, one of the big key changes. And I think uranium, why uranium has been underperforming, because a lot of this thematic, especially in North America, has been driven by the tech companies. This drive for electrons, and if they're clean, reliable, and baseload, even better. And that has empowered a lot of these trades. And so, what's that attracting? It's attracting tech bro type investors who sitting there looking at a uranium developer who's talking about the same project that he or she was, discovered in 2005. And here we are 20 years later, and it's just been a capital sink because of cycles. Or there's these bright, shiny objects that in nuclear innovation doing these wonderful things that are going to the moon, and you can't justify them on valuations at all. However, if you don't own them, they're going up. And I think that's been the key change, is that, follow the money. Tech companies are investing in innovation, um, advanced nuclear. It's not even advanced. We've known about these technologies since the 1960s. And they're giving all of these guys price certainty for 10 or 20 years and demand certainty for 10 or 20 years. So, why wouldn't you be there? I mean, we're about to potentially see the biggest nuclear IPO in history with Holtec talking about coming to market on their Palisades, $10 billion IPO. I guarantee you that's going to be monstered when it comes out. Um, and so I think that's been the key thematic is, and we saw it a little bit in DeepSeek in January, where DeepSeek happened, all of these things got absolutely hammered. And then unfortunately the uranium stocks got hammered as well, but hadn't quite had the same uplift. But here we are again, and we'd been buying the dip on all of those things because saying, "Oh my God, Microsoft cancelled one lease. Who cares? Um, this trade's not going away." And the Trump administration and Energy Secretary Chris Wright was saying everything that was saying that they were going to be wanted to be the superpower of tech and AI and nuclear power is getting dragged along with it.
I was going to ask you what it takes to get investors back into the explorers and developers, and it just sounds like, if I'm hearing you right, it's just going to take a performance, like, or a significant move in the uranium price.
Yeah, yeah, it will. I mean, it's as I was saying before, in North America, you can own Cameco and it's a successful trade. And like we've been max weight Cameco for a while now. I mean, because it's again, where are the flows going to go? They're going to start in the big caps. They're going to play in this speculative stuff in the nuclear innovation, and they're eventually going to roll that big cap profit down the capital stack when they get confidence that it's not another false start. And they're seeing that a little bit, the spot being re-energized, and we were part of that very first private placement just to completely, we took the gamble on giving them some money at a premium to reset that whole mindset of them selling pounds, but more importantly, to reset the mindset that they just were relying on the at the market. Unfortunately, that first raise we couldn't get more than that 25 odd million dollars, but they've been much more successful recently with the 200. That kind of stuff is bringing some confidence back. Although I think you probably still need to see a spot price push through $80 and stay above $80 to really give them some incentive. And I'm kind of hoping that that July they do get a bit aggressive, because North America wants to go on holidays. So it's not just long only fund managers going up to the Hamptons. It's also, the little crummy little short hedge fund managers who are going to Jersey Shore as well, right? So, they all want to cover their positions. They don't want to be. Did you see what I did there? They don't want to be they don't want to be sitting there max long short this stuff, just like a long only guy doesn't want to be max long. Um, so, if they can push this up, get that 83, $85, and we get this sort of round of capital raises out of the way, then I think that there will be more confidence to come down the capital stack. Because at some point as well, I mean, you're already seeing it with analysts here in Australia. Oh, this is overpriced. It's too fully valued. We can't put a buy recommendation. It's now sell or at, or a hold. And I've always thought with Cameco that analysts have still got that story completely wrong. However, they're going to sit there and hit F9 and say at some point, we can't justify any further upside. And if that spot price is giving confidence to get down the stack, then those investors will roll that capital down.
Maybe you can just expand on that. When you say the sell side has the Cameco story wrong, what exactly do you mean? What do you see that they don't see?
Um, so it was the same. Excuse me. I think, I mean, it's hard for an analyst to properly value the Westinghouse opportunity um, because 10 gigawatts of nuclear in the US by 2030, things like that. And until you're actually seeing these things being built and seeing how the capital risk is spread, it's hard to put a value on that. And people have tried, whereas I sort of see Cameco now as a complete package. It's not a uranium play anymore. And yes, I know that Grant gets up there on most occasions and talks uranium, but because that's what the analysts and the investors want him to talk about. And I always say to them, you need to be getting a Westinghouse person on your calls all the time, like get them out there. But for whatever reason they don't, which is fine because, as I said, I just still think there's an enormous value in there when you think about the only gigawatt scale reactor that's approved in the United States is the Westinghouse AP1000. So what's the starting point? How do you get these things built more cheaply? You build the same things over and over again. The Koreans have shown that, and I think the United States would be absolutely negligent if they didn't take the learnings from Vertical 3 and 4 and reapply those. I mean, they had what 10 or 15,000? I can't even remember the number. They had a huge amount of people getting skilled up on how to finish those reactors. Okay, they might not have started them. And in fact, I heard that there was a whole bunch of that workforce that were over in welders that were over in France working on some of those EDF reactors. So there's a massive skill set there that wasn't there a decade ago. So, what has that been a benefit? Cameco and Westinghouse. The deal they've now done with the Koreans are pushing hard everywhere. And this is one thing we were saying to the coalition down here in Australia. You won't have to build these things, guys. If you win federal parliament and remove the nuclear ban, you won't have to build these things. You'll have the Koreans and the Americans and the Canadians. You'll have them all down here saying, we'll give you 7 gigawatts of capacity. No problems. So yeah, I mean, as I said, it's the go-to name. It's easy. It's liquid. You don't have to do too much work on it if you're a generalist. But as I said, I still think there's great value in that stock in the longer term. If it rolls over 10 or 20%, I'm still holding it, but I got a better risk appetite, a longer term risk appetite.
So you touched on M&A earlier. You said you weren't too happy with some of the deals we've seen in the last few years. They were just acquiring land more or less. But let's say we do something more significant. Cameco goes after NextGen. Okay, Cameco's trading at or near all-time highs. I don't know what kind of premium it's at, but significantly more than where NextGen is, which is flat on the year. Could you see that happening? And do you think this would reignite the sector?
Um, yeah, look, I mean, the reality is Lee and NextGen shareholders aren't going to make something like that easy, and I 100% would expect them to do that and want them to not make it easy. I'm a shareholder myself, and as I said, I don't think they need to be taken over. I think they can do what they need to do. But yes, there does need to be consolidation, and it's probably, I mean, it should be Cameco, but it's probably not going to be. There's plenty of other, but you look at the United States, for example. Everybody's got a project in every state, and somebody's got a central processing plant. I kind of always semi joke with these guys and say, "I'm going to have a conclave. I'm going to lock you all in a room with a map and some little chess pieces, and you're not allowed out until you do an asset swap that makes efficiencies of jurisdictions, of regions within the United States, because you're telling me you're going to do 800,000 pounds a year, but you don't have a central processing plant, and the guy that's got the central processing plant 10 miles down the road is going to have your eyes out on a deal, so it's never going to happen. So there's a lot of strategic stuff that needs to happen, probably not at a Cameco level. I mean, as I said earlier, if NextGen was in play, it'd be massively bullish for the sector because it delays that project. But there's a lot of projects sitting in the wrong hands, or not consolidated because of egos of whatever, um, that still needs to happen. And I look down here in the ASX, and I'm always talking strategically to these CEOs, especially the ones I kind of rate and follow. Um, and they're much more gun shy on M&A than we're seeing in North America. So the point you alluded, like there's so much of this stuff that just happens because, and you kind of scratch your head and go, I think I was at one point like 0 from 4 on predicting M&A because the M&A that happened just didn't make any sense to me.
And so you mentioned that you don't think Cameco is going to take over next gen. Who would it be in your mind? And I was just
Well,
looking up the market cap too of next gen. It's only 4 billion US. It's not like it's a
yeah.
massive number, right?
I mean, the reality is, what we saw last cycle was we saw a lot of oil and gas companies getting involved in the space, and especially kind of around shale and fracking and things where they were drilling and what have you. Anyway, so there was so many instances where you look at historical drilling, and it was an oil company that did it, and not just stumbled onto uranium, but looking for uranium back in the cycle. So, you could get an outsider come in because, to your point, if it's 4 and they even pay 8 or 10 for it, um, it's still a great asset. I think the way Cameco, they continue to say not interested, blah 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 blah. If we wanted it, we would have bought it much lower valuations, this, that, and the other. Um, if somebody was to make a play, they would probably put their hat in the ring. Orano may bring Cameco in kicking and screaming if Orano was to make a move. I mean, Orano have lost French supply. Sorry, French. They've lost supply in Niger. They're running around Mongolia and Uzbekistan, and they're now down here in Australia looking for things. They're looking for pounds. They've got as far as I'm aware, an area of cooperation agreement in the Athabasca with Cameco. So if they were to flex and make a move, then Cameco would probably come along as part of that joint venture. I don't rule out someone like a BHP. Um, they're in Saskatoon already. They've just sunk a massive shaft on their Jansen Potash project to the 150 miles from Saskatoon. There's BHP trucks driving all around Saskatoon. There's middle management. They've got all of their structure there. They're in uranium as a byproduct. They've got sales and marketing teams. They know every single utility around the world. They know every single trader. If they bought that, it would make them a number 2 producer in the world of uranium. So, like, do they look at it? Wouldn't rule it out. Um, like you could draw a long list. Tech Resources, do they, play the Canada game and say we're pro Canada, we've got all this cash because we sold our met coal, we want to diversify. Who knows? It's going to be really interesting permits are once these permits are approved to see who puts their hat in the ring. But I mean, as I said, I don't necessarily think that they need to be taken out. I think the permits approved, they get a re-rate anyway, because they'll be able to raise the capital tomorrow. There's no problem with any of that.
When lithium was ripping a few years ago, we saw a number of OEMs make investments in various lithium companies. The biggest one was General Motors. They made a $650 million investment into Lithium Americas, which is a lithium mine in Nevada. Do you see something like that happening? Maybe it's a utility company, maybe it's big tech.
I kind of think something like that has to happen because right now the the whole sector thinks that the market's going to solve the uranium supply equation. As I alluded to before, even with NextGen, even with Denison, even with Bannerman, even with Deep Yellow, even with all of these projects, by 2030, we've still got a problem. And that's not even accounting for any of these small modular things, more small modular reactors that are currently starting to get built, and where that goes. So they kind of have to. I don't think it will be the utilities. Started, the utilities need to do something. And I say to these developers, getting a utility contract without a final investment decision is a noose around your neck. It's a liability, and we've seen that with Peninsula. And we've seen that with some others where they're having to try to renegotiate these things because it's worth zero. It's a piece of paper saying, when you produce, you'll owe me some pounds on this pricing formula. And if you don't, I'll sue you. Um, Not helping them get into production. In theory, it's helping them go and raise capital via equity or debt, right? I sit there and say, no, guys, because by the time you do that, who knows where the price is going to be? And then you've locked yourself into a point down here where the market says, you crazy cats, there's no way I'm investing in you because you've locked in 30% of uranium, 20% below the current price. So they do need to do something different. And it probably has to be something more like a prepay because, or maybe a convert structure. I don't know, but I know they don't want to end up owning a uranium mine. And I'm sure some of these OEMs that went down that lithium route at sky high prices we're never going to see again probably regret that as well. Um, so is it big tech? Maybe. I mean, you've seen Nvidia just invest in TerraPower. Um, there's no doubt. There's no doubt in my mind. For example, Microsoft Three Mile Island. There's no doubt in my mind that the Microsoft team met with the Constellation fuel buying team. Completely, there's no reason they would in doing a deal like that. It'd be a completely different part of Constellation. But my point is, the tech companies are not making these multi-billion-dollar investments without having an probably a better understanding of the fuel cycle than the majority of the market. They're switched on. They know full well where the crunch points and where the problems are. So, yeah, and see, it would surprise me if they're believing that the uranium supply can get there by itself because they're a lot more of a cynical mob, those guys. And I even talked to a few of the data companies down here, and they're smart people. Um, but what does that look like? Yeah, I mean, as I said, it will look like something eventually. And but I don't think it's utilities per se owning uranium mines. They just won't want to go down there unless they're forced to by a tech company.
Well, Guy, this has been an insightful conversation, and I want to thank you very much for spending time with us today. If somebody would like to follow you online or read more about your research or your firm, where can they go?
Yeah, so we've got a LinkedIn profile, Tribeca Investment Partners. So we post things like this, any thought pieces we put out across our whole platform, which is Aussie Equities, Global Natural Resources, and the nuclear uranium stuff. And our website, www.tribecaip.com, is where you can find more information.
Very good. And I will make sure I include a link below in the show notes. Guy, once again, thank you.
Thanks very much for having me. Appreciate it.
Scott, thank you very much for joining us today. How are things in Denver?
Great, Jimmy. It's a pleasure to be with you, and so much to unpack in the uranium and nuclear energy industry today that lots to talk about.
This is one of the reasons why I love this sector so much. There's always so much going on. Now, you wear a few different hats. And before we begin our discussion, why don't you tell us about a few of the different jobs that you have?
Yeah, so I'm Executive VP of Uranium Energy Corp, which is a leading U.S. uranium miner and developer with operations in Texas, Wyoming, and Saskatchewan, Canada. I'm a co-founder and CEO of Uranium Royalty Corp, which is the royalty and streaming company in the uranium space, similar to Wheaton Precious or uh, uh, Franco-Nevada. And then lastly, if I didn't have enough to do, I'm very honored to serve as president of the Uranium Producers of America and head up our industry group with our government affairs work back in DC.
So you are exactly the person I want to talk to. And because you are based in the US, You're the perfect person to ask this question to. The U.S. is the world's largest producer of nuclear energy. 20% of their grid comes from nuclear. And the current administration has implemented various executive orders to stimulate or promote the further growth of nuclear energy. One of those executive orders has to do with increasing capacity from 100 gigawatts to 400 gigawatts by 2050. And so my first question to you is, how feasible is this?
Yeah, listen, the Trump executive orders as they relate to nuclear, there was four of them. One on reforming the Nuclear Regulatory Commission, one on deploying advanced reactors in support of national security and AI, another to reinvigorate the industrial base, which has a heavy focus on the nuclear fuel cycle, and then really promoting the national labs to streamline some of the reactor testing. But that headline statement by President Trump of basically quadrupling nuclear power in the United States by 2050 is, I think historic. I think it's on par with Eisenhower's Atoms for Peace speech, which really kicked off commercial nuclear power globally. Of course, if it's just a slogan and they're just words, it won't mean anything. And so what we're very encouraged about is all of these executive orders have real hard action items and timelines to really make that happen. And whether it's limiting and reducing the review period for new reactors, from what has been, many years to now no greater than 18 months for a large reactor and less than 6 months for a small reactor, that has profound impact. And I'll tell you why. I mean, another element of this build out has to be who's going to pay for it. And some countries really focus more on the taxpayers, like maybe in the UK, it's more of a taxpayer funded initiative to build out their nuclear energy program. But I think in this country, particularly in the Trump administration, I'm not saying there isn't grant money for research or advanced reactors, but this is going to have to be funded by capital markets, private investments. And there are, we saw 14 of the world's largest banks pledge to support nuclear power in that tripling of nuclear power pledge that came out. And we have the hyperscalers also willing to put hundreds of millions of dollars into this, if not billions, but they don't want that uncapped liability of regulatory and permitting timelines. And if that can be limited and very defined, I think the capital's going to flow and the plants are going to be built.
And currently, the U.S. produces very little uranium, but it consumes 40 to 50 million pounds annually. That's what it takes to drive these nuclear reactors. What do you think the U.S. government can do to stimulate more domestic production?
Yeah, so a couple of executive orders are really speaking to that question. I mean, we were independent in the United States, in the West, of sort of Russian supplies prior to the breakup of the Soviet Union. I think in subsequent years we got a little lax and went kind of globalist in relying on critical minerals, on pharmaceuticals, on energy commodities from countries that don't really share our values. And so we're now in a situation where 100% of our uranium is imported, but 50% of that is coming from Russia, Kazakhstan, and Uzbekistan, and a full 20 to 25% of our enrichment comes from Russia. That's not a situation. That's not American energy dominance and being self-reliant. So, the steps being taken in the executive orders are speaking to perhaps Defense Production Act funding of additional government uranium purchases of uranium conversion enrichment, and that obviously means U.S. origin uranium enrichment in support of not just energy security but also the defense side. We have the aircraft carriers and submarines, some 104 reactors and 84 ships and subs that run 24/7 on U.S. origin uranium. That stockpile is working its way down in the 2030s. And so I think we're at the point where that needs to be replenished. So that would be welcome investment in addition to the Nuclear Fuel Security Act funding that came out of the last Congress that is already in the process of buying U.S. origin uranium conversion and enrichment. So that helps. Another executive order, which was independent of the nuclear orders, but came out actually a couple months ago was the immediate measures taken to increase American mineral production, and particularly in the areas of critical minerals. And here the White House has said, if you are a critical mineral producer or uranium producer in the United States and you're held back by federal action or inaction in getting your mine into production, come to us. We'll put you on priority timelines of getting those approvals and moving you forward. That's important. I mean, even producers in the West that are in agreement states like Texas and Wyoming, like my company is, we have a pretty good regulatory structure there, and the cadence of approvals is quite positive at the state level. But where you run into problems is when you have Forest Service, Environmental Protection Agency, or you're on federal lands, and that's where things bog down. And so if the White House can unblock that logjam, we've already seen them name a number of U.S. projects that are on that fast track list, and there'll be more to come.
You raised an interesting point about the nuclear ships and also the subs. How many reactors did you say?
I think we're at about 104 reactors in 84 ships and subs. But what's more important is we're now back in the shipbuilding business again. A number of Columbia class and Virginia class submarines that are being built to kind of keep our Navy on par with the Chinese. Those loads are initial loads, and they're larger loads of uranium and enrichment. But also, we're also aware of the NNSA, the defense side of the Department of Energy, making some of their higher enriched stockpiles available for the HALEU fuel loads of these first-of-a-kind advanced reactors that are being built in places like INL Labs in Idaho or Natrium down in Wyoming. That's depleting the stockpiles faster than they would have. So I think it's a very real, it's probably one of the factors that investors haven't really focused on, that U.S. producers could have an added demand stimulus beyond just this incredible growth in nuclear power.
And do we have any idea what the annual demand is for these ships and subs?
I think then you're getting into like a classified territory where I don't think we're supposed to know, and I don't think you're going to see the U.S. government advertising that this is becoming a looming issue. But we do have acknowledgement that it is something that is now going to be prioritized again for the first time since really, that build out in the 60s and 70s and early 80s really stimulated a lot of uranium production in the United States. We've been living off those stockpiles, but now it's probably time to replenish, really what is a strategic uranium reserve. That was something that the Trump administration did in his first term. And we're certainly recommending that the president continue on that program. It was intended to be a $1.5 billion program over 10 years. You'll recall it was much smaller. In reality, it was 75 million over 1 year. So we know that's something that President Trump likes, and hopefully he'll come back to that, and we'll see more government purchasing in that regard.
You mentioned that one of the other executive orders that President Trump put forth was to streamline and accelerate the regulatory process. And is this achievable under the current framework of the NRC?
Yeah, listen, in the last administration and the last Congress, the Advance Act was passed, which intended to do just this, is really reform the NRC from being so obstructionist or slow walking nuclear power plant reviews and approvals. And so that process was already underway. I think these executive orders are really going to put that on steroids. I think, it's obvious we're going to have a debate around nuclear regulatory independence and safety. I don't think anybody in our industry wants to see that compromised in any way, shape, or form. But what we want to see is that the NRC move more quickly and not have unnecessary bureaucracy. If a reactor has been reviewed, especially a small modular reactor has been reviewed and approved, and the design is sanctioned, if you will, it shouldn't have to go through a full process. It should go through an expedited process, having already been reviewed and approved by the NRC. So there's things like that that I do think it is achievable. But yeah, it'll change the way the NRC has operated for many, many years. But remember, too, we now have a unique situation in the United States where Republicans and Democrats are both as likely to support nuclear power as the other. And that's something more recent. I mean, that's really the climate change and the energy transition push, recognizing nuclear can get us to a lower carbon future. You know, you're not going to get there on wind and solar alone. And so the left really embraced nuclear power. I think on the right, we just like nuclear power because it's abundant, reliable, resilient, and affordable energy. But however they get there, that's fine. We have enormous bipartisan support. And my hope is that that now trickles up to the nuclear regulatory uh, commission, in that, you know, the people that the Democrats are sending to be commissioners are just as likely to be supportive of nuclear power as the folks the Republicans are sending. So very optimistic, but this reform is underway in real time right now.
And a related question, when it comes to the construction of mines, as we both know, it can be a very long and tedious process. Just from discovery to production, you know, could be looking at 10 to 15 years, depending on
Yes.
the jurisdiction and the type of mine. But what can the government do to expedite this process?
Well, listen, you know, we have a 50 million pound deficit globally. If there was perfect mobility of uranium globally and there were no trade restrictions, there's still a 50 million pound gap. It's about 1.5, 1.7 billion pounds over the next 15 years. So, you know, the demand is there. Prices have been strong. I think even at $70, $80, that's probably not the full incentive price that will bring on all the production that's needed, but it has incentivized sort of the low-hanging fruit. And what I mean by that is the restart of idled mines have been the first ones to restart and come to production. The Paladin mine in Namibia, the Boss mine in South Australia, and a number of US producers that were already permitted and in many cases already had the infrastructure in place, and it was a matter of restarting. Those mines have restarted or you know, are in operation now. But that's the low-hanging fruit. And I don't want to imply that that's easy, because some of these have even been you know, struggling to get back to the production levels they were at before. But now we need that next generation of mines, which are more greenfield. And you know, we probably need 6, 7, 8 new mines coming online over and above those restarts between now and 2030. And a lot of these are in parts of the world in Africa or in Kazakhstan where they're either difficult geopolitics or that uranium is not going to be available to us. So if you want additional mines coming online in the United States, that means we have a whole host of Uranium Producers of America members that are in the exploration and development stage and just going into the permitting process. You know, they will have an advantage. I mean, we went through the process and it took 6, 7 years to permit a lot of our mines in Wyoming and Texas. If they have a shorter pathway, that's how we get more US production coming online. But globally, the world needs more production. We just have missed an entire exploration and development cycle. We had one of the longest and deepest bear market cycles in commodity history with uranium. And so it's not going to be like copper, zinc, silver, other commodities where you have an ebb and flow of prices and investment. There's not a whole lot of standby mines sitting in the wings in Indonesia, South America, Africa that can come on and moderate a big price increase. So I think, you know, higher prices are needed. They're actually not a bad thing. I know the utilities don't want to hear that, but this is what's needed to stimulate the new investment and the new next generation of mines that will come on in the coming 5, 6 years.
And what price do you think we need? What term price do you think we need to incentivize new players?
Yeah, listen, you know, speaking for UEC, we were, you know, a restart with our mines in Wyoming, which are now up in operation. And we're starting up a new well field satellite at Burke Hollow, utilizing the existing infrastructure down in South Texas at Hobson. We stated very openly that our threshold in the spot market was about $60 a pound. And so, you know, we're comfortable moving forward at these price levels. But I think if you have the whole full capital investment ahead of you in some conventional mines, that capital lift might be $1 billion to $2 billion to build a mine and mill. I think you're going to need, 90, 80, 90, $100 as a threshold of the next level of new mine production. And remember, we've gone through a lot of inflation in recent years, and the cost of everything's gone up. And so we shouldn't kind of think of prices like they were in recent years. Everything has to be reflecting of that inflationary period that we've gone through.
I want to ask you about big tech now because we keep
Yeah.
hearing about Microsoft and Meta and Nvidia and so many other companies getting involved. And of course, they're pursuing cheap forms of energy and reliable forms of energy. Nuclear energy is one of those. Meta, for example, has a capex this year of $72 billion just to focus on AI and focus on their data centers. So, of course, they're going to need a lot of energy. And given this need for large amounts of reliable energy, do you think big tech would go further upstream the same way General Motors did when it invested $650 million into Lithium Americas?
Absolutely. And I mean, let's unpack this a bit. The growth story that we've been talking about in nuclear power over the last 10 to 20 years has really been a growth story in the emerging markets, right? It's about India and China, trying to, establish a standard of living, just, a fraction of what we enjoy in the Western world. Um, but now something else is really added. We have base load growth, demand growth in the developed world. And that was just on the electrification of homes and businesses, electric vehicles. And then when you layer on data center demand, we now have exponential growth in the United States for electricity. And we haven't built base load generating capacity in the United States for many decades. The only thing we have been adding is wind and solar because of the production tax credits. But that's not what we're looking for. We're not looking for intermittent supplies. We're looking for base load. I don't know if you saw the Barclays story. They concluded that we've seen the seventh consecutive year of greater than 25% electricity demand growth from data centers. So that's even before this major step change in the AI computing. So this is very real. So it's not surprising data centers and the tech companies, I mean, they're going to be looking to natural gas. They're going to be looking to nuclear. And in some regions, I think even coal-fired power plants are going to get a little bit longer lease on life than what would have been the case in, say, a Democrat administration. But this is real for them. I mean, the only thing between Amazon, Google, Microsoft, these companies, them and multi-trillion-dollar market caps is having sufficient energy to run data centers to pursue their AI goals and ambitions. And so it's not surprising we've seen them invest in the restart of 3 Mile Island. We're looking at Palisades in Michigan. Amazon's gone to Talon and said, hey, I want to go behind the meter and buy your electricity from your nuclear power plant before it hits the grid. FERC has had something to say about that, but they're still citing the data centers there, and it will be a draw on that output. If these tech companies are that forward-thinking and strategic to try to grab that electricity before it hits the grid, hits the market, well, why would they sit on their hands and just say, well, we'll hope that the uranium conversion enrichment comes down the road? And so we're beginning to see a lot more interaction with these tech companies. I know in my case, our company, we're going to these SMR conferences and we're meeting with the infrastructure energy people at companies like Amazon and other hyperscalers. So that could really change the dynamics. The utilities have been kind of the top of the food chain for as long as we've had nuclear energy, but they might have a new competitor kind of coming on the scene that might be a little bit different than their rate regulated world or a state-owned power company.
New competitors with a lot of cash or a lot of capital to throw at these various investments.
Absolutely.
Do you think there are really Do you think these utilities are aware of that, or are they still in a deep sleep?
Well, I think the management teams are aware of it because they're being, Constellation has been approached now, and from both Meta and Microsoft. Talon's working with Amazon, so I think they are very aware of it, and they're taking great advantage of it. And if I could just say something, I mean, I think this infusion of tech energy, no pun intended, into our industry will probably take nuclear energy to a place we wouldn't have gotten to otherwise. And again, rate regulated utilities, and state-owned companies aren't really the hotbed of innovation and risk taking, but these companies are. But what the traditional utilities can provide is they understand nuclear operations, they understand nuclear safety, and the combination of those two, I think we're going to achieve big things. I think at the fuel buyer level, I think it's hitting them now that, if they haven't been strategic in looking out at their nuclear fuel needs going forward, they need to perhaps step up their game. And I'll also, say that I oftentimes hear, well, yeah, in the nuclear fuel cycle, the step of UF6 conversion and enrichment, that we have real tightness there, but uranium's fine. I'm here to tell you, uranium is not fine. We're in a structural deficit, which is not anything new to our industry. But for the first time, we can say that the excess inventories are largely gone from the market. So we're shifting from inventory driven, where people could be complacent because the market was always moderated by secondary supplies. We don't have that anymore. It's now, available pounds are going to depend on the permitting, licensing, cost of production, and timeline to develop. So I think we're going into a very different market. And I think it's going to be tested in terms of the long-term contract that we'll see even in the last 6 months of this year. I think we're going to see a real step change in the long-term and spot market.
I hope you're right. So you mentioned SMRs, and we have seen many big tech investors get involved in nuclear innovation. Bill Gates co-founded TerraPower. He's invested well over $1 billion of his own money. NVIDIA recently invested in TerraPower. Sam Altman is a large investor in Okla and Helion Energy. Do you think these new innovations in SMRs have a chance of succeeding? And if so, when do you see that
They
happening?
really do. And I think even before, this tech infusion was occurring, we were seeing the first of a kind plants move forward. And it was largely through government, in our case, DOE, ARDP, Advanced Reactor Development Program funding of cost sharing of those first units. Three companies, NuScale, TerraPower, and X Energy, were identified in that program. X Energy looking to be in South Texas, TerraPower moving forward very aggressively in Wyoming, NuScale shifting focus to now likely their first build will be in Romania. But those were already occurring and kind of on the timeline of development in the 2028, 29, 30 timeframe. GE Hitachi and the BWRX 300 reactor. Don't forget that they've been already building on site at Darlington, Canada, outside of Toronto there, and will be probably the first one to come online before all of this executive order and Trump initiatives and the hyperscalers. But I think now with capital needing the space load generation more quickly, Trump administration willing to shorten the regulatory review time. And in some cases, don't forget that one executive order that says if we can expedite the building of SMR and advanced reactors by siting them on DOE land or federal government land or military institutions, they're going forward, with that in a very big way. And that's important because the defense side needs uninterruptible, resilient power, not just in places like Guam or in Sirleaf in Turkey, in battlefield situations, but they also need uninterruptible, resilient power in places like Denver, Colorado, and Tampa, Florida, where through space-based weapons programs and conducting drone strikes halfway around the world from a military base in Tampa, Florida, they can't rely on the grid, the public grid going down. They have to have their own power supplies. And then Trump also recognizes that Well, if these bases need that resilient power, also the AI needs, if we can co-site them on federal land, we kill two birds with one stone, and we shorten the regulatory and construction timelines.
Yeah, you raise a very good point about these grid lines and the importance of them staying online. I mean, look what happened in Portugal and Spain earlier
Yep.
this year, like unbelievable. So, okay, you mentioned the SMR that's currently being constructed at Darlington. What's the timeline associated with that? What's the best case scenario of
I
that?
think they're indicating a 2028 startup. And, there is a situation where the GE Hitachi, this BWRX 300 design, there's different ways you can approach the small and advanced reactor market. You can basically take a larger light water reactor, boiling water or pressurized water, and miniaturize it. Not unlike what we've done in the submarines and aircraft carriers. Those do not require, unique fuel cycles, materials. It's basically just making what we know and making them smaller. So in that regard, I think they have a leg up. They're not being hindered by the availability of HALEU fuel. But I think we always have to acknowledge too, and I think, people like Bill Gates would say, we just don't stand still. We always must innovate and move forward. And so some of these advanced reactor designs are either kind of next generation designs, or in many cases, they're taking technologies that were identified in the first wave of nuclear build out, but really didn't get a full vetting because of the strength and leadership at the time of Westinghouse and GE. Kind of these pebble bed reactors where the fuel in the reactor are literally uranium contained in balls, either pebbles or small golf ball sized balls that contain the uranium and have materials that are resistant to melting down at pretty much any temperature. Those were not a new idea, but they really didn't get a full chance to prove themselves when we just kind of went down the light water BWR, PWR designs back in the 70s and 80s. So it's a very exciting time. But Darlington, I think, has an advantage. It's very straightforward, simple, smaller size reactors being built there.
And Scott, I know this is very early days when it comes to SMRs and these newer innovations, but have you seen any research associated with the SMRs and demand for uranium and what it might be 5 or 10 years out?
Well, this is a very bullish situation in that, our company and companies like ours are very engaged with the World Nuclear Association and the supply and demand reports that we put out every 2 years. Even the trade techs and UXCs that, are tracking kind of traditional existing reactor demand. And we have 440 reactors operating, another 60, 65 more under construction. Those are just the traditional large reactors. So, we're already on track to double nuclear generation by the 2040s. That's really before we get these advanced and small modular reactors coming into the picture. So that's where we get, the WNA's pledge to triple nuclear power by 2050, President Trump's quadrupling by 2050 in the United States. I think that's how you get there as you layer on. But even if there wasn't any SMRs to talk about, we're already in a significant deficit today of what we produce globally, what we consume. And so, it would be a very compelling supply and demand fundamental argument for uranium investing, even without SMRs. My point is, with them, that's gravy. That's just gravy on the cake. So, if they can be built faster, obviously built on time, on budget, this will revolutionize the way electricity is generated and distributed. I mean, I think the full growth will hit, in the 2030 timeframe, but I wouldn't be surprised to see more of these small reactors operating before 2030 than we had assumed even a year or 2 years ago.
Scott, I want to move the topic along now and talk about geopolitics. And there's currently a ban on Russian uranium imports. And even though Russia can't sell to the US, they can sell to China. And China can just turn around and sell those products to the US. And I think you call that replacement swaps. Is that right?
Yeah. Yeah. Listen, we addressed the Russian reliance in the last Congress with a ban. Now it's a ban that has a couple years grace period, a waiver process where utilities that in the United States were frankly very heavily reliant on Russian supplies were given the ability to kind of get themselves off of that by December 2027. So, going forward, I think we really moved forward from the Russian supply dependency. It would be a shame if we got off of that addiction and then we just got on a new addiction, which would be Chinese enriched uranium, because I think, I'm not against global markets and a global nuclear fuel trade, but I do draw the line with Russia and China. I don't think they're acting in our interests. They predatory price, they dump uranium, all with the intention of limiting our ability to supply ourselves. Now, that would be one thing if it was just for electricity generation, but it's even a greater concern. It's a national security concern when you think about the submarines and aircraft carriers. So you're absolutely right. At the time of the Russian ban going into place, we saw an unusual and abnormal spike in Chinese purchases of Russian uranium, Russia to China spike in enriched uranium. And then almost at the same time, we saw a spike in Chinese EUP exports to the United States going from practically zero to very meaningful amount. And that is, something we've alerted Congress, the Commerce Department. Everybody's aware of it. Nobody likes it. So I wouldn't be surprised if you saw, once Congress, smoke settles on this big, beautiful bill and getting the budgets in place, and they turn their attention to additional, new legislation. I wouldn't be surprised to see the Russia ban extended to include China. And again, we're not advocating this to cause chaos in uranium markets. We're doing this to cause, greater certainty and stability in Western markets. If you allow the Western markets to just be reliant on those sources, you're never going to see the investment needed in uranium conversion enrichment in the United States or even in Western Europe and friendly allies. I'm not implying that 100% of American needs to come from American mines and facilities, but we shouldn't be delivering zero. And so I'm very encouraged at the early progress with uranium mines that are coming back into production. But let's not stunt that positive story by then, starting a new reliance on Russian or Chinese uranium.
I want to ask you about URC now and what you're seeing in terms of deal flow. And I'm just curious with these depressed prices that we've seen here in the past year or so, are you seeing a lot of deal flow? Are you seeing, is
We
there a lot
are
in the
really
pipeline?
we're really in our wheelhouse right now because, for all the things that we've talked about, we're seeing a number of uranium developers wanting to become uranium miners. And, they're in various stages of the startup build out of their operations. And it could be in Africa, it could be Australia, US, Canada. And, they may be 25, 50%, 75% through this build out of this new capacity. But then we had, first half of this year, we saw uranium equities really hit unfairly by things like, DeepSeek and rumors that, we were going to go back to a reliance on Russian uranium, which certainly isn't the case. And then certainly Liberation Day knocked everything back. So you're a miner developer. You need your next 25, 50, $75 million to continue the ramp up of your new mine, but you can't really go to equity markets and do a raise, or if you do, you're going to see very significant dilution. And you really don't want to do that knowing that your share price is going to be 2, 3, 4 times more valuable in 2 years than it is today. So when Uranium Royalty comes with a royalty or streaming financing proposal, it's a non-dilutive way to get that capital and continue to keep the ball rolling forward. At $80 uranium, you don't need to encumber a lot of your future production to get $35, $50 million today. And so I'll say we've never been busier in terms of that pipeline of potential new business. And As we stand today, we're at 25 royalties on 22 projects globally. We just added a longer dated royalty on Forum's project up in Nunavut, which surrounds the Orano Gigavic. So yeah, we're very excited. Even if we just lived with the portfolio we have in place, within 7 years, probably has the ability to cash flow $50 million annually. But we're not content with just that existing portfolio. We want to really grow the portfolio and follow the Franco-Nevada Wheaton Precious model in the royalty space.
Where do you think the uranium term price will be in 7 years?
Well, it's very interesting because right now the price reporters are reporting something in the 80 to $85 long-term market price. But I'm not sure there are many deals being done at that level. And I think what we're going to see, and this is of profound implications to uranium investors, we went through a sleep mode. The last several months have been very quiet in the spot market, in the long-term market, way below replacement contracting levels. But that can't go on forever. Nuclear plants are running 24/7. Uranium is their oxygen. They need to come to the surface and breathe at some point. And I think that's what we're going to see in the last 6 months of this year, where utilities are going to prefer to go to the long-term market and add additional long-term contracted supply. What I think they're going to see are very thin supplies. There isn't a lot of uncommitted existing mine production available to be contracted. And if various miners do have available production, I think they're not going to part with it, especially considering some of the contracts they might have locked in over the last 4 or 5 years are at much lower price levels with ceilings and lower base prices. So they're either not going to have available production to offer into the utilities in these long-term RFPs, or the prices that they're going to offer are going to be much higher than 80, 85. And then the utility is going to have a decision. Do I want to bite the bullet and sign these contracts? Even if it's market related, it might have a $140 ceiling. Do I bite the bullet, sign that, or do I go back to the spot market? That's their only choice. Now, we know from Sprott's activities just in the last couple of weeks that the spot market is very thin. It can easily handle a couple, 2, 3, 400,000 pounds at a time. It can't handle 2 million pounds of demand at a time without going up significantly. So really look for the long-term price and the spot price to play off of each other. And they're both relevant. I've heard some people say, well, the spot market is irrelevant. Well, I don't think it is irrelevant. I think it's real in that the activity in that market influences the long-term base price starting points. And where that long-term base price starting point goes to, it influences the spot price because of the carry trade. So I'm very bullish on price. I went into the year stating that we would see $100 prices by the end of the year. I'm still sticking by that. I think the Sprott buying, has gotten us up now to the $78 level, but that can't be the catalyst. It's got to be the base demand from utilities and other players. And don't forget, a lot of producers that sign contracts to deliver to utilities thinking they were going to be in production by now are also finding themselves buyers, and they're having to go into the market to buy to supply contracts they thought were going to be filled from production. So look for a very bullish second half of this year.
I'm glad you threw that number out because I was going to ask you if you think the spot price closes above or below 100.
Mm-hmm.
You just said $100 or higher.
Yep.
So now, as you also alluded to, the term market's been very quiet. Less than 30 million pounds has been contracted year to date. We're already halfway through the year. And do you see a big pickup happening in the back half of the year? Like, do you see that number doubling or
It has
tripling?
to. I mean, it has to. I mean, every year that the utilities go at below replacement rate. So what that means is if the world consumes 180, 200 million pounds annually, the 440 reactors, they should be contracting forward purchases at a rate of about 180 to 200 million. So if we've been at 30, 40, 50 million, that means that utilities have fallen behind the eight ball. Now, we all know they carry inventory, so they have a year or two. In the US, most utilities have about 2 years forward demand in inventory. So they do have a little bit of breathing room, but you can't hold your breath forever. And at some point, you've got to come to the market. I think utilities like to see it's kind of a crazy situation. When uranium prices are low, utilities tend to pull back because they feel that uranium is abundant. I don't need to act. But when prices start to move, they then realize, oh, wait, the bottom's in. I need to start moving. I mean, they should be buying when prices are low and stepping away when prices are high. But the reality is, I think, as prices strengthen over the second half of this year in the spot market, there'll be strong signals. And we're already seeing some RFPs and a lot of off-market activity coming to the market already. And then you have just other systematic buyers. We tend to talk a lot about the European and US utilities, but we have a very large nuclear power program in Korea, for example, where KHNP takes a more systematic, where every couple of years they just have systematic long-term contracting, and their requirements are getting bigger, not smaller, going forward. And so those are big, big, chunky long-term purchases that are really going to soak up a lot of supply. And don't forget the Chinese. In the past, in my times with Cameco, we did billion-dollar contracts with CNNC and CGN. And when they come with they have a very big appetite, being the fastest growing nuclear program in the world, likely to surpass the US by 2030. So don't underestimate when those big buyers take some big chunks. That's just even less available mine supply available for others. And I think this is where the hyperscalers come in as well. I think we're going to go into a period, probably sooner than later, where the availability of mine production becomes more important than the price, chasing the last 25, 50 cents or a dollar. And I think as a major consumer of uranium, you should be really looking strategically as what can I get my claws into, a portion of a producer's future mine supply. That will be the focus going forward, rather than just, in an oversupplied market, it was pretty easy to buy uranium and nuclear fuel, from the first quartile to the fourth quartile fuel buyer. After a 12-year bear market, there wasn't a lot of distance between them. Now, I think going forward, you're going to have utilities that were extremely strategic and contracted very heavily over the last 5 years, and have great contracts with great producers, at very low prices, and their average cost is going to be lower than utilities that were less strategic and find themselves in this stressed kind of supply squeeze market that we're going into.
Well, Scott, this has been a great discussion. And as we wrap up, you've been involved in uranium for a long time. Have you ever seen another time period like this when it's been so bullish for nuclear energy and also uranium?
I really haven't. And it's encouraging because the thesis is so strong. It's not just an emerging market story anymore. It's developed and emerging markets needing more electricity. The green energy transition, it's not emphasized as much in a Trump administration, but it's still important to a lot of people around the world to have cleaner, carbon-free energy, like nuclear power is providing. Geopolitics, unfortunately, the world is getting more complex in that regard. So Western supplies are becoming more important, and then just that structural deficit is very real and now growing because demand is growing faster than we're bringing on new mines. So, I mean, for the investors on the call, I mean, if you're new to the uranium space, you're returning after a pause. Or maybe you hung in there and persevered through all these ups and downs in the cycles. It's going to be a very, very good second half of the year for uranium investors. 2025 is going to, I think, be an epic year for both nuclear energy and uranium.
That is a great finish. Anytime you use the word epic, good things are going to happen. Well, Scott, I want
Absolutely.
to thank you very much for being with us today and sharing your thoughts on both nuclear energy and uranium. If somebody would like to learn more about you and about your company, where can they go?
Yeah, so uraniumenergy.com is our website and uraniumroyalty.com. And certainly able to follow up on any inquiries we receive through there, but happy to talk to investors about what's happening right now.
Scott, once again, thank you.
Thank you, Jimmy.
Para, thank you very much for joining me today. How are things in Monaco?
Hey Jimmy, it's nice to see you again. It is very warm. It's a little steamy in Europe at the moment, but fortunately, it's not as bad here as it are some other in Spain and Greece, for example. It seems quite a bit hotter, but it's yeah. So I'm surviving, but it's a little on the hot side for me. As a Swede, I'm not very good with hot temperatures.
Now I'm curious, of all the places in the world you could move to, why Monaco?
I mean, it's beautiful. It's you're right on the water. There's great hiking. I have a friend visiting from Sweden right now, so you're gonna go hiking tomorrow morning, and it's good. You got the French food, you got the Italian food, you got the French wine. It's a good life here.
You got the best of both worlds. And
Yeah.
now I'm curious, what sort of finance community is in Monaco? And are there a lot of people that know much about nuclear energy and uranium?
Surprisingly, it is actually. I wasn't expecting it, but I've met quite a few people who are invested in both nuclear energy and uranium. I wouldn't say everybody is, but they're clearly stay on top of things. And yeah, there's obviously a lot of private wealth in Monaco, so there are some investment communities here. And yeah, I've been in touch with a few banks and a few of the trading houses who are interested in learn more about it. So I can do a little bit of outreach in person here as well, which is a lot of fun. So I do like that part.
So you and I spoke not too long ago, and I thought it would be a good idea to sit down and have a discussion on what's happened in the spot market since the last time we spoke, especially since the $200 million was raised, and just how the dynamics of the spot market has changed since that time.
Yeah, it's obviously changed quite a bit. There was a pretty big reaction to the news when it did break that Sprott raised to 200 million. So the price jumped 10% pretty much that same day. And then yeah, we've been fairly busy and picking up about 1.5 million pounds for the trust. So it's always, I mean, I like buying uranium, so it's fun to be busy again and to re-engage with the market. So I've been on the sidelines for quite some time, and it's a lot more fun to be in the middle of things, of course. And yeah, dynamic wise, I mean, it's a bit of a repeat, unfortunately, from before. Everybody runs from the hill when they see a lot of money, and then they front run you, and then they pick up the cheap stuff, and then they sit and wait for you to come to them, and then it becomes a waiting game, and you find some cheap material somewhere, and then they start coming down a little bit. So it's a bit of a dance, but we're all at the end of the day, we're all good friends anyway. So, but yeah, it's a process anyway, but it's an enjoyable process.
So you've acquired 1.5 million pounds, and what can you say about the spot market as it is right now? Is there still a lot of sellers out there, or do they come alive at various levels or higher levels?
They certainly were. Once we started coming up towards $80 a pound, you noticed that the sellers did come out. They also got enough time to react to the news, I guess. So yeah, now there's about a handful of sellers out there. So it's a healthy amount anyway. I would prefer to see more buyers as well. So spot is not the only one, but it's I'm sure that's coming as well. So.
And how would you characterize these sellers? Are they traders or producers?
Producers have not much material to sell so far. It seems like they're sold out for this year to a large extent next year as well. So sure, there can always be some things on short notice, even a contract negotiation fails, or a lot of utility or producers don't want to sell all the production in case they do have some hiccups. So there could be little bits and pieces that become available now and then, but it's very hard to plan for. So I would say most of the discussions are with the intermediaries, so whether they're trading houses or banks or just investors. But it's that's where most of the material is coming from.
And since Sprott announced the $200 million raise, is your phone ringing off the hook? Do you have to phone people or do traders phone you?
It's in the beginning, is like when people react, yeah, there was quite a lot of phone. I had to turn it off from time to time, and when I don't want to be disturbed. But it's of course it's fun that people do reach out, and you also want to get a cast your net as wide as possible. So some of the ones that are maybe not always in the market, you want to reach out to and just make sure that they're aware that. There is some activity in the market again, but the ones that are active on a daily basis, yeah, they have my number. So.
And how many traders are we talking about? Is it 5, 10, 20?
I mean, the most active ones is yeah, probably between 5 and 10, I would say. I would love for it to be more, and we have some new names getting active as well, which is great. So hopefully they can keep that going and get a healthier spot market in general.
Perry, you mentioned that you've acquired approximately 1.5 million pounds since the $200 million raise. How many pounds have traded in the spot market year to date?
Year to date is about 27 million pounds, I think now, which is yeah. So we're gonna extrapolate that, we end up about 50 million pounds. So not not this busiest year, but certainly not like a very thinly traded year either. But hopefully it picks up in the second half. So I would sure hope we end up closer to 100 than 50 anyway. But we'll just have to see what the fall looks like anyway.
So, in addition to the spot market being very quiet, the term market has also been very quiet. Last year, approximately 120 million pounds were contracted. Year to date, we're less than 30 million pounds. Can you give us any color on what's happening in the term market?
Yeah, I would say that number is probably slightly misleading because there are a lot of discussions going on, and a lot of them are bilateral, where you don't necessarily announce the terms or the volumes until the contract is signed. And in some cases, there's also basically an extension of an existing contract, so like a blend and extend. You just add 5, 10 years to an existing contract, and in those cases, it's not a standalone contract, so they don't always get reported right when it happens. They might be, on a quarterly basis, or even at the end of the year, they may announce, oh, by the way, we also did this much through bilateral negotiations that was just ongoing in the framework of an existing contract. So it's probably it's a little misleading to just stare ourselves blind at the number that's being published from the price reporter. So they that's the number they hear, and they track it and publish it, but it can be fairly chunky sometimes, and the step changes that happens in those numbers, and also just from an activity perspective, it feels like this year has actually been fairly active when it comes to discussions and RFPs in general. It's just that the numbers haven't really shown up yet. So, but I do expect activity in general to pick up in the third and fourth quarter this year.
And so, do you think Q4, the end of the year, do you think the number is going to be closer to 100 million pounds?
I mean, I would think so. Feel pretty good about that, but but again, it could also be that there are negotiations that are launched in Q4, and then if they're not concluded by the end of the year, it's going to spill over into next year. So where that exact number has like lands, it's not that easy to tell, but it still feels like there's a fair bit of for one activity, but there is also I would say, fairly substantial amount of rumors or at least talk, anticipation of fairly sizable tenders coming out here in the remainder of the year. So again, like it might not be in the middle of the summer that someone launches something very big in July, but yeah, stranger things have happened, and we're just gonna keep an eye on things.
And why do you think it's been so quiet? Do you think it's a pricing issue? Like people want 80 bucks, or the fuel buyers want to transact at $80, but the producers or the sellers are maybe at 90 bucks or higher?
I don't think there's so much discussion around where the term price itself is, because I think it's probably quite a lot of utilities that would take as much as they can at $80, or maybe even 90. I think the problem is that the producers want as much index related as possible. So I think it's much more a discussion around the floors and ceilings. Where are they right now? Whereas if you're a supplier, you always want to push that up as high as possible. So again, unfortunately, Cameco is the only one who really mentions anything about those ceilings, and I'm very thankful that they are, because at least that gives them a little bit of an indication of where the numbers are. And Last fall, it was about 130, 135. But we did hear just in Australia a few weeks ago in early June that now it's 140 and maybe even higher than that. So those numbers keep creeping up, but I think that's where most of the discussions are. I also, if you look back earlier this year, utilities has been pushing for lower floors because they point to the spot market, especially when you're in the low 60s, that you can't ask for a ceiling that's way above where the current spot price, or sorry, you can't ask for a floor that's way above where the current spot market is. And then there just was a kind of a stalling in negotiations for a little bit. But I do think that it's at least we're seeing signs that utilities aren't they're not hampered or they're not hamstrung and they're not paralyzed anymore, where they can, at least some of them can act because of all the tariffs talk and sanctions talk. A lot of them just froze and couldn't act even if they wanted to. And now at least we're seeing that some of them starting to move. So now it's just a matter of finding a common commercial ground, and eventually that will happen. It just again, it's just like it is when you buy stuff in the spot market. It's a dance, so you just gotta give it some time.
I always get a sense when I speak with you and others that the strategy of these utilities or the fuel buyers, it's one based on hope. They're hoping Kazatomprom is going to ramp up production, or they're hoping we're going to get new supply in the market from Paladin or Boss or other small producers, or they're hoping the Chinese are going to stop buying. They're hoping the spot price is going to drop. What are your thoughts on that?
I would probably disagree. These are engineers. They don't pin their hopes on something. You might see as an investor that how can they be so cool in this? Or you hear some investors or some people who talk a lot in the finance community are just saying, they don't know what they're doing and they're asleep at the wheel. And I just don't agree. They might be that it's not their biggest driver is to you pick the absolute bottom. And even if you're a fuel buyer, you probably will pick the buy. Like, this is a good time to buy. These are good prices, but you also need the permission to buy. And the utilities are pretty slow moving like companies that they need board approvals, they need time to prepare a tender. So the fuel buyer may or may not want to buy right now anyway, but they just won't get the permission to do it. So yeah, I don't think they're just hoping. They just have bigger issues to worry about, either as an individual, as the fuel buying team, or as a utility as a whole. They might have other focus that they just don't have time to focus on it right now. And as I mentioned before too, like in the overall grand scheme of things, your fuel cost is actually not that huge. So if you miss the absolute bottom, it's not the end of the world. You obviously want to make sure that you get the fuel because not having fuel is just not an option. But it is not that they're sitting with the finger and they're trying to time the exact right point in time to pick the market. There's so many other factors that we simply don't see. I worked at the utility, so I know a little bit about it, even though I wasn't the main fuel buyer by any stretch. But at least I heard the thinking and what they were looking at, and it's a lot more complicated than to sit and look at whatever the spot price is doing. So I think it's a lack of understanding for their role that rather than more than anything.
And what about when Spot raised 200 million bucks? Did you get calls from fuel buyers and saying, "Oh my God, they're going to be buying all this uranium"? Depending on the price, that's 2.5 to 3 million pounds, right? Which is quite significant. But did you get any calls from fuel buyers? Like, were they surprised? Are they concerned? Do they care?
I think the entire market was surprised by it. And yeah, if they are concerned, they certainly have a I know they have very good poker faces. So they certainly didn't say that they were concerned, but yeah, no, they've also known that the investment community has been very quiet. There hasn't been a lot of buying over the last year or so even. So they knew it was going to happen sooner or later. They probably did not expect that it was going to be the sheer size of it that happened, but I don't think anyone else expected that either. So that's hats off to John and the team at Sprott and Canaccord who managed to make it happen. But I think it was everybody, including fuel buyers, was taken by surprise.
And at what point do you think the utilities really come alive? Like, what's going to be the catalyst to really push them to become aggressive in the market the same way the Chinese have been?
I mean, it's I don't know if they ever get pushed to a point where they have to get aggressive. Sure, if you go back, you saw what happened in conversion and enrichment when the Russians invaded Ukraine, that would probably qualify as aggressive compared to normal fuel buying. But in U308, I don't know if we're there just yet. Sure, if you have a big supply shock, then yes, I can see that probably happening. But so far, it's very few utilities that are sort of have that panic behavior. But yeah, they need to procure and they will procure. Most of the tenders right now start, 27, 28 maybe. But we've seen some who wants to buy in year, and there's some active now that wants to buy now for this year and for next year, which is not very common. And but then it certainly does happen. So it's all different utilities have different procurement strategies. And also, like as I alluded to as well, like there could be various reasons that we don't know why they haven't been buying yet, and all of a sudden they get a green light. Like it can be a political decision or an approval for a life extension, and now it's like, all right, now you got to go and buy the fuel. And so then the fuel buyer is handed a pretty difficult situation, but of course they'll get it done, and we're in those situations, obviously the whoever the fuel buyers are reporting to will be aware of the situation that you're given a very short time frame to get this done, and this might not be the ideal market to do it in, but that's the deal, that's the hand you got to deal with, and they'll do the job accordingly.
Now, one of the big themes that we have seen last year and this year is big tech getting involved in nuclear energy or embracing nuclear energy. And do you think the utilities or fuel buyers see big tech as a competitor now?
I don't think they do that yet. But I'm sure they do, like, because they obviously see it also as potential partners. If you look at Constellation and the Chris Crane Energy Center, where you have some big techs, so they're signing up for 20-year power purchase agreement, which is so then they're very big partnerships. There is also an angle to where they're developing their own reactors or building their own projects potentially. And then, of course, then will be a different situation. So they're almost becoming a utility themselves. We haven't seen that sort of really definition of, I was like, of a investment decision to do that just yet. But I wouldn't put it out of the realm of possibilities. And then the situation would change quite dramatically, I think, if that happens. But I have heard of big tech companies reaching out to both reactor vendors to ask for basically what would the term should look like if you will buy a reactor, and also to fuel suppliers, like what would it look like? So they're educating themselves, and that I think is definitely a bit of a wake up call for the industry as a whole.
And with regard to big tech and utilities, do you see any of these new buyers, the tech companies, going directly to producers and locking in supply?
Like I said, they haven't, as far as I know, I haven't heard of any transaction yet where they bought directly from a producer. But I have heard of instances where they do reach out to producers to basically just educate themselves and see what would an offer look like. So they're clearly having teams internally that are getting up to speed into what does this process look like. And if they're in the scenario that they probably think that utilities are simply not expanding fast enough, we gotta build our own power stations so we can get the electricity we need. They're certainly gearing up for that. That's kind of the hints that I'm getting anyway. But it's well, so I'm personally very interested in that to see where that's going to land, and it can certainly accelerate things. So that's something that's worth keeping an eye on for sure.
So we touched on the spot market and the term market. Now I want to ask you about the carry trade and what's happening there. And now that the spot price is approaching the term price, what's happening with the carry trade?
Yeah, it's not a no-brainer anymore, right? Because now your starting point is so much higher than when we were at the low 60s, and the term price has held the same. So the term price is still 80, even though, as I mentioned, I don't know how many transactions that actually happen at 80. I think it's more of a lack of data points than anything else. So that's why, I mean, it's always worth a shot if a utility is looking for, a couple of 100,000 pounds a year, 2, 3 years out. I mean, we certainly throw a carry trade at them and see what happens. And if you're successful, then you know that they're still alive. So it's I wouldn't rule out that is not a possibility at all to be successful with the carry trade. But clearly the economics look a little differently, and you probably will have to find a counterparty that really values the security of supply, so that you know that there is no mining risk, there is no transport risk. these drums are at the facility I need whenever I need it. They're a book transfer away, so I can basically call on it whenever. And there are certainly utilities that would consider paying a premium for that service.
How many pounds have transacted this year with carry trades? Any idea?
I mean, it hasn't been much lately, so I think it's about the same as it was a couple of months ago. So I would say about 3.5, 4 million. And some of that is utilities who've been buying themselves and basically they just carry it on their balance sheet. But also basically carry trade functions where you have an intermediary or a bank stepping in and buying and finance it either themselves or through a financing party.
I want to ask you about the Chinese now because they've been very aggressive buyers, buying most of their supply from Kazatomprom. Do they ever enter the spot market?
They are on the buy and sell side, so they're quite active both buying and selling. But overall, yeah, obviously a net buyer considering their nuclear programs. But they yeah, you notice when they come in why and why or other for sure because they're fairly sizable. But then we
Why?
also hear that they, even if they're not spot market related, but we heard Cameco mentioned in Australia that just a week or two before that conference that Cameco had their marketing team in China and they were talking to all the big Chinese utilities and they were discussing term contract that stretched out until 2050. So that's 25 years from today. Now they might have started in 2030, but still, that's like Cameco doesn't even have mines that will operate in 2050. So they're looking at a situation where they're obviously going to have to find new mines here, whether the acquisitions or developing their own, but they're being asked to contract longer than the longest lifetime mine that they have. So it says something about the situation and also the long-term thinking of certainly the Chinese utility at least.
So once again, they're just trying to lock up supply. So if they're able to go ahead and build these 150 reactors by 2035, they're going to need a lot of pounds. So they're just trying to lock that up. Is that their thinking?
Yep, exactly. It's diversify, so obviously they're not going to get everything from Kazakhstan, so they want to find as many long-term partners as possible. So it's and I mean it's right, you're looking at all the reactors being built in the world today, half of them are in China, so it's a market you can't ignore.
And do we have any idea how large their stockpile is? How many pounds or how many
It's
tons?
very hard to tell. I mean, it's probably hundreds of millions of pounds, but then considering they barely have any domestic production whatsoever, you need a strategic stockpile. So like whatever that number is, to me, it's kind of irrelevant because they are going to use it for the domestic program, and you spend so much money and effort in building this fleet of nuclear reactors, you don't have the domestic supply, you have to have a big stockpile. And the good thing about uranium is that it obviously doesn't take that much space. So it's like you can have a huge stockpile. You don't have to have this massive underground, oil storage facilities or natural gas storage facilities. Storing uranium drums is actually not that difficult. So.
Now you mentioned sometimes the Chinese come in on the sell side, and I'm curious why that would be if they have such large demands.
Yeah, it's just to know where the market is probably. I mean, I don't know exactly what the rationale is, but just like any trader, it's probably good to be on both the sell and the buy side to know where the market is, and the more transaction you do, the more intel you have. So it's I'm sure it's an educational process too.
We didn't talk about RFPs. What's happening there? Are there any large RFPs in the market?
I mean, there's a few ones out for sure with various time frames. There's not one of the monster ones yet, but they obviously don't come around too often. But we're anticipating a fair bit of activity over the next few months. So it's like I mentioned too as well. Like, it's like I don't know if it's going to happen right in July, probably not. But around WNA, I would expect some fairly sizable ones.
So quite, I've heard you say in the past that South Koreans quite often come to the market with a large one, 68 million pounds. Are they in the market at this time?
We haven't seen it yet, no, but yeah, it's again, it's like it's not like they have to come, but it's like yeah, I think they haven't been active for a while, so and they tend to be more or less public around it anyway, so it's we will see it if it does happen, but yeah, fairly 6 to 8 million pounds is fairly sizable. So, but it's like again, it could be smaller, it could be bigger, you don't know, but at least it's one of the ones that we're expecting to come anyway.
So if we're to summarize what's happening within both the spot market, the term market, it sounds like it's still very quiet. Less than 30 million pounds have traded in the spot. Less than 30 million pounds have been contracted in the term market for what we know. Maybe it's a lot higher, to your point. But overall, things still sound pretty quiet. Would you agree with that?
Yeah, it's quiet. It's not completely quiet, and certainly if you look at the activity, it's been ramping up over the last couple of months. So yeah, well, it's too early to tell and make projections on what the rest of the year is going to be like based on looking in the rearview mirror. But I still feel fairly optimistic about the volumes that's going to be going into for the second half of the year. But yeah, again, probably not July. Of course, things can change, but I wouldn't expect too much anyway. But then as we're moving closer to the WNA symposium in London in September, then activity tend to pick up with that.
Well, Per, this has been a great discussion as always, very insightful. I always love hearing your thoughts on what's happening out there. And as we wrap up, maybe you can give investors and viewers just a sense of what they should be looking out for as we head into the back end of the year.
Yeah, first of all, take some time off in the summer, but yeah, read up on news. Maybe like I would like did mention before with the big tech companies, because it's such a new, fresh breeze in our industry, and I think we're just seeing the very early signs of it. So someone who's new and just start reading up on that stuff, or coming from that space, and from that from that perspective coming to the nuclear space, they probably know more than people who are already in the nuclear space about it. So it's so they become experts very quickly on that. And but that's something that certainly I want to learn more about and understand more about and talk to the tech companies and see what they're thinking, because I do think that they have the potential to change the playing field quite dramatically. And I think, yeah, I think it'll be quite exciting if they do. So it's a big potential, but it's overall, I mean, there's so much good news going in nuclear energy in general that it's like I'm by no means it's almost like you would have seen you look at any given week now and you would have taken that 10 years ago, and I mean it would have been champagne corks flying left and right. So so we certainly we're in a very good place right now, and I think that's going to keep going for the remainder of the year and years and decades to come. So it's quite exciting times for sure. But I would keep a bit of an extra eye on the big tech companies for sure, because that's some big potential there.
Well, Per, once again, thank you and enjoy Monaco.
Thank you very much. Have a great summer.